The Tonight Show with Mr. T. Tonight's guests, Mr. B, Mr. R, Mr. BS, and Mr. S.
Yeah, Mr. T! Coming!
Well, I'm Mr. T, and today on the accounting show, we're going to talk about the ideas of Richard Lewontin on his CBC Ideas program. So, we're going to have some accountants come and talk about that, so I might as well just talk to you about the accountants. Accountants don't die. They just lose their balance. Okay. What do accountants suffer from that most people don't? Depreciation. Okay. Well, in all seriousness, Tiger Woods is making his comeback today, and I hear he's in need of an accountant because he cannot account for all the women he has. So tonight we will be talking about Richard Lewontin, evolutionary biologist, geneticist, social commenter. He won the Seawall Wright Award from the American Society of Naturalists, and he's helped set the stage for the modern field of evolution. So we're going to have 4 accountants come in and discuss his ideas and how they relate to the field of accounting. Well, tonight our first guest is Mr. B. Can we give him an ovation, please? How are you doing?
Good to see you, Mr. T.
Good to see you as well. Richard Lewontin discusses the use of metaphors and cautions against transplanting these ideas into other fields of study. Can you elaborate on this idea?
Sure, Mr. T. Well, Richard Lewontin discusses how Richard Wagner uses the term metaphors, and in fact talks about how the danger of metaphor is eternal vigilance. This is relevant to both biology and accounting. Richard Lewontin discusses how the billiard ball model knows what to leave out and what to leave in. Biology, on the other hand, doesn't. Now, this is true of accounting as well. Although he talks of DNA, there's other relevant matters in accounting. Metaphors such as accounting as an instrument or accounting as a lens are commonly used. This tends to prescribe a particular belief, and when we teach students about prescribing metaphors and instruments and lenses, there's certain beliefs inherent in this. Talking about accounting as a lens or an instrument tends to imply similarity to a ruler or a device or a gauge when really it can be no such thing. It also tends to focus on the ability of accounting to focus and magnify, yet there's tremendous potential for abuse and misuse of numbers and focus on things that may be irrelevant or contrived and may have a lot of social implications as well. The other thing I wanted to touch on was the use of metaphors in the stock option debate. So this was popularly used in the early 90s when the expensing of stock options was a popular issue. So again, accounting was talked about as a tool, and it was discussed as a tool capable of fixing a broken economy. Well, this was sort of expanded into a metaphor of accounting as a sharing mechanism, and it was used to popularize the idea of the American dream and how stock options were a sharing mechanism to fix the economy, and this appealed to a lot of people. This was even popularized by a U.S. senator who basically made an appeal through self-interest and incentives being able to fix the economy. So this is dangerous. Metaphors can be dangerous in accounting as well.
Well, ain't that the truth? We'll be right back with our next guest. So, Mr. R, Richard Lewontin discusses the fact that different outcomes can come from the same DNA. Can you expand on this?
Yes, well, in his audio discussion, Lewontin talks about how DNA provides instructions for amino acids to link together. And they have the instructions to link this together, and they do so, except to make proteins, there has to be a 3D folding of these amino acids. And this is very imprecise science. Actually, scientists cannot predict accurately how the protein will develop into. They can just make reasonable guesses on how it will happen.
And can this relate to the field of accounting?
Yes, definitely. Actually, I don't want to use a metaphor now that I heard what Mr. B was talking about, but but I do think that it's relevant in this situation because you can say that the protein, the DNA, is relevant to is analogous to our qualitative characteristics and our principles in accounting, and the environment is the companies and the accountants. And what we're trying to make in accounting is the accounting statements, the financials, and the balance sheet and the income statement. And it's very imprecise. There's a lot of professional judgment. and this causes different financial statements and different judgments, so the numbers are not always the same.
And what about research on financial markets?
Yes, it can also be applied to that. One of the fields in accounting is capital markets research, which tries to predict the share price and the impact of accounting performance measures on the share price. And this is also very imprecise. You can never, well, I won't say never, but it's very difficult to predict what kind of share price it will be just based on your accounting information.
Well, thank you very much, Mr. R. We'll be back shortly with our next guest.
Are you one of the millions of Americans who suffer from insomnia? Is insomnia affecting your work life or your sex life? Well, we have the cure for you. It's called Accounting Theory by Michael Gaffigan. This will put you to sleep in seconds. Don't trust my words? Well, let's ask the consumers. Presto! He's out in seconds. They won't know what hit them. Order now, Accounting Theory by Michael Gaffigan.
Well, thank you for coming, Mr. BS.
Well, thank you, Mr. T.
I would like to talk to you about Richard Lewontin and the fact that he discusses how organisms change in their environments due to evolution. Can you expand on that?
Oh, I would love to. So Lewontin has his own theory of evolution, and he claims that organisms alter the environment they live in, and as such, they have to evolve to this new, ever-changing environment. And it's more of a cause and effect relationship. They cause the change, and then they have to evolve to these changes. Now, accounting has similar concepts applied to it, and you can apply this to a few cases we see in the modern world. And the first is how accounting principle makers are pushing for the use of fair value accounting treatments in order to make accounting financial statements more transparent. Now, a study by Elliott and his partners claim that such accounting treatments would create endogenous risk in the financial markets, and this would ultimately alter the environment that accounting would be practicing. So you can see how accounting treatment would change the environment, and then accountants would have to evolve to it.
Interesting. I've also heard that there are some new rules coming about in accounting. Does this apply to them as well?
You are 100% correct on this. The process of accounting convergence also illustrates how this accountants change their environment. And mainly accounting standard setters have been pushing for convergence for many years now. Now contrast this with what FASB claims as the definition for financial statements, and they're used to prepare for the users of financial statements. Now, you can probably see right now how domestic users of financial statements are slightly upset about this because it seems to be favoring multinational corporations. Still, accountants are still pushing for this, and we can see how the push for convergence by accountants will alter the environment. And the evolution aspect of this will just be the convergence and adopting of new international standards.
Well, thank you for that insight, Mr. BS. We'll be back with our next guest. We'll go into more depth about the convergence in accounting. Well, thank you for coming, Mr. S. I'd like to go more in depth about this concept of universality and convergence.
Well, Richard Lewontin talks about physics as it being fully universal because there's a full set of principles that they can follow, and it's easy to follow these principles through every stage, every sort of development. But in accounting, it's kind of hard to have one set of guidelines universally, because in different cultures, in different governments, there's a whole bunch of different things you got to address, which cannot be done with accounting universally. And also there's a whole thing about accounting. Some places have rules-based guidelines and other places have principle-based guidelines. So it's kind of hard for accounting to have one set of universal principles.
And do you feel that the regulation and convergence to a universal set of standards, do you think that will be important in the years to come?
It's gonna be important, but it's hard to implement. Like, there has been universal scandals such as Enron and WorldCom, with them having places in all over the world basically, and they're kind of working around, kind of doing tax evasions and stuff like that. But it's hard to implement these rules with all these different governments in different places.
Well, that's very informative. Thank you. Well, that will conclude our time for all we have today in the Accounting Show with Mr. T. Be sure to catch us next time.
The Accounting Show by Mr. T has been brought to you by Accounting Theory by Michael Gaffigan. It will put you to sleep.